Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of GameStop, ticker symbol GME. And I'll also be going over AMC Entertainment, ticker symbol AMC. But I first wanted to start with GameStop, which closed on the day May 15th, so that's Wednesday, closing at a price of $39.55, being down almost 19% on the day and continuing down about 9% to $36 in the after hours. So it doesn't look that great since we did see some pretty nice highs just yesterday. But I do think this is to be expected to see a big rally up, a cool off, forming higher lows, and then rallying to the next level. I think that may be happening this week or perhaps next or the following week. So I do think we should be bracing for some upside. And the reason why I do have the chart on this time frame is because I think something pretty key happened on May 3rd that really signaled that we would be seeing these bullish moves. And so that is that on May 3rd, which was a Friday, GameStop closed at a price of $16.47. And so on that day, the max pain for options was $11 a share. And so given that GameStop closed well above that, in my view, kind of forced a gamma squeeze to start happening where people are exercising their options calls, which results in market makers needing to provide hundreds of shares to those retail investors. And that then drives the price up. Even if people aren't exercising their options calls, market makers need to be able to provide those shares, so it forces them to buy, resulting in a gamma squeeze. And I feel like that's what was initially triggered on May 3rd, and that has then propagated into other stocks like AMC. And so, I do think that we're just going to see more moves higher, because if we do look at GameStop's max pain for this week, it is at a price of $18 a share. So this will of course go up over the course of the week. So it might be $20, maybe $25 by the end of the week. But if we are closing the week right around $40 a share, that could be triggering more upside as more people start to exercise option calls, or even if they don't, market makers need to be able to provide those shares, i.e. buy those shares, driving the price even higher. And so if I do flip over here to the current time frame where we see the past two trading days where we had these massive moves hitting a high on the 14th of $64.83. However, I don't think that's going to be much compared to what we'll be seeing in the next couple weeks, maybe next couple months. I do think this is the first wave of many waves to the upside, so do brace for that. And with that being said, I do think that whether it's $36 a share in the after hours, the low of $31 a share, or $40 a share, I do think we will be seeing much higher prices, but I do think it is good to be waiting for pullbacks to be buying dips. And so that is why I wanted to go over some levels in this video, really just based on this Fibonacci retracement that I took going from the low that was hit on April 16th up to the high from yesterday. And so from that, we can see that the 618 is at a price of $30.91. And the low for today was $31. So right around that level, just kissing it barely. And so I do think that was a good predictor for where a bottom might be, a good dip buying level. And also, with yesterday, we did see a dip down to the 50% level at $37.39, having hit a low yesterday of $36, which is, the after hours price right now. So I do think those are some good levels to be keeping in mind, but it is possible that we do go lower. I do have the purple line marked here at $30 a share, that just being a psychological level, three $10 bills. And then also $24 did stand out to me as a level from the past that might be playing as support moving forward. But then the 786 from the retracement here is at $21.69, so maybe $21 to $22 might be a good dip buying level. But then I also do have these lower levels. I don't think they're going to be hit, but $18 a share, as we do have this consolidation here, could be acting as support. And then at the base of that consolidation is $15 a share. So maybe those are some dip buying levels, But realistically, I don't think it's going back that low. But if it does, I definitely think we'd be finding support at 15. I don't think we're coming back to 9.95. That sale is long gone. So do keep that in mind. But I also did want to point out this level here, right around $48 marked in green. That is a historical level that I do think will be acting as support. And actually yesterday, before I zoom out too much, yesterday's close was $48.75, so above that green level. Hopefully we start to get multiple closes above that level with it acting as support. And as we did see it acting as resistance going back to, let's see, March of 2022 as well as August of 2022, we do have this kind of double top there. While that was resistance in the past, if we do get above it and hold that, that will be serving as a launch pad for getting to prices much higher. And I definitely think that we could be seeing the triple digits again. So do brace for that and don't let these sales, even at $40 a share, pass you by. Good to go in slowly, of course, but these pullbacks, they're designed to scare us. So don't get scared. Take advantage of dips while we have them. And don't look back and think that you regret not getting more at $9.95. We all regret not getting more at $9.95. And you never know until you're looking back. And right now we're seeing a dip. So I think that this is an opportunity. But anyways, talking about other opportunities, I'm going to go over the AMC chart here. And so AMC did close the day on Wednesday at $5.48, being down exactly 20% on the day and continuing down a little over 6% in the after hours, being at a price right around $5.13 as the after hours trading has closed. And so one thing that I find really interesting about this chart is that we did pull back to this white downtrend, which is really just the top of this parallel channel that I've drawn. I'm not really sure that it's that significant because, we have traded above and below it on multiple occasions. So take it with a grain of salt, but I do think it's interesting that the low for today being $4.71 does seem to coincide with the top of that channel. So maybe there's something there. And also, I did do another Fibonacci retracement here. This one, I didn't go to the all-time lows because it didn't line up with a dip that we saw today. But from going with the low hit on the 13th, so just a few days ago on Monday, the low was $3.16, the last opportunity to get in the threes. And so from that, going up to the high here of $11.88, we did pull back to the 786, right around a price of $5.03. And so I think that's a pretty good level to be keeping in mind, because $5 a share, maybe price doesn't dip exactly to that, or maybe orders aren't filled exactly at that price. We do think in whole numbers. Other people might beat you to the punch. So $5.03, a little bit above that. And so that is represented here by the 786. And we did get a dip below it today, and we're trading, just a little bit above it in the after hours. So we'll see where it is in the pre-market. But I do think that, $5 is a good dip buying opportunity. And before I get too much further into the chart, I do want to go over the max pain for this week with AMC. And so the max pain for AMC is $4 a share. It's been incrementally going up. It was, I believe, $3 and then $3.50, now $4 a share. And so hopefully we are closing well above that. But if AMC is not and GameStop is, I do think that AMC will be moving with GameStop. So if GameStop is closing 2 times the max pain or $10 above the max pain, and AMC is only $1 above their max pain, I think that AMC will be riding along with GameStop. But I do think that there could be another weak lag like we saw with GameStop. Closing above $11 a share, seeing a week of kind of flat before the next rally up. So if following this pullback we see a week of flat, I think that's just more time to take advantage of the dips before we start to see more rips. And so levels to the upside to be keeping in mind. The 618 here is at $6.49. We did wick below that yesterday, but closed above, closing at a price of $6.85. And then the next level up here is the 50% retracement. That is at $7.52. cents, so $7.50 right around there. We did not even get a wick up to that level today, whereas we did get above the 618, but could not close above it. And then also, before I do get ahead to the upside, I did also want to point out this purple downtrend, which I do feel like is more significant than the white channel because it is based on these two pivot points over here. It was resistance over here. Now that we're above it, I do think it could be acting as key support, and that would be returning to or retracing to the scene of the crime if we do pull back to that purple downtrend. And so from that level, if we do dip down to maybe $4.30 or $4.20, that could be an amazing dip buying opportunity, finding support before the next rally up. So do keep that in mind. The dips are designed to scare us out of our positions. This is, like I said, I feel like the first wave, and we will see more waves. So a pullback to 550 is a great discount because I do think that we will be getting back up to $10 a share as well as 11 and higher. And so I did want to just point out that that $10 a share corresponds with this gap that has now been filled, and that 1143 corresponds with this high over here and somewhat of a double top over here. And I actually remember making a video about price being right around $8.01 in November, and I referred to this as being a double top above 11. And so that's exactly what we saw. That was key resistance then. It does seem like it is resistance again because we got a high yesterday on the 14th of $11.88 before pulling back massively, closing, like I said, at $6.85. So hopefully we're able to get back to $12 a share. I think we definitely will be able to. And if we do, if we're getting there with strength, starting from, a floor of whether it's $5, $4, $6, maybe $8, that would be, I think, getting us higher than $12 a share. And that red line would then be acting as support before the next leg up. And so my thoughts are that, I feel like AMC is going to be closing above $8 a share this week on Friday. And so I do think that we will be seeing more violent moves to the upside next week, the week following, and perhaps going on for a month or so. So do brace for that and do not let the dip scare you away. I am trying to take advantage of them as much as I can. And so I'm just really looking forward to it. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.